Hi everyone, this is Dr. Duru from Ahan Analytics with the market breadth. Let's just dive right into the news. Well, there is a lot of news. I mean, I could spend a few hours just talking about all the news this week. But let's stick to the financial markets. And to me, the biggest news in the financial markets are the constant stream of IPOs that are dropping. It says a lot about the market's mode, which is right now in melt-up mode. Money is flowing, people are speculating, nobody's worried about anything. No matter what the headlines in the news say, people take it as an excuse to buy stocks, at least the stocks that are attracting the most speculative interest. Things that drop don't stay down for long because people are looking for quote unquote cheap stuff to buy. So anyway, this big headline here really dominates. I don't know why Figma is on here. Figma is now kind of an old IPO compared to the number of IPOs that dropped. In coming weeks, I'll review some of them. It's just that in their first trading days and first trading weeks, the charts really aren't all that interesting, except for one particular pattern that, again, I will cover in future videos. But for now, let's talk about the more mature companies, starting with market breadth. Okay, this is my favorite technical indicator, the percentage of stocks trading above their 50-day moving averages, what I like to call AT50, for above the 50. What you can see here is that AT50 closed the week at 61.5%, and that was essentially sorry, let me adjust my image there. There we go. You can see that basically ended up closing the week right below where it opened and just essentially right below where it closed last week. So let's just call it a wash. Market breadth was down, then it had a good day Thursday and it dropped down. And I forgot one of the important economic signals of the week was inflation. I wrote about it in my Inflation Watch blog. You can check that out at inflationwatch.drduru.com. But I'll just say that to me, a trend up in core inflation is not a good thing. It's also not good context for what's coming, which is the Federal Reserve next week will cut interest rates. So I am just sort of hedging my bets more and more in terms of what is going to be the outcome. Is the market going to sell the news on the rate cuts? Is the bond market going to completely drop once those rate cuts come in? It's just a whole lot of uncertainty, and I'm amazed that the market doesn't care one bit about it. Anyway, so market breadth, is a wash. Percent of stocks trading above 50-day moving averages. The percent of stocks trading above their 200-day moving averages was also essentially a wash. It closed the week at 60.3%. So amazingly, it's near where AT50 is. It also was a wash, but at least I like its positioning because it's still staying near the highs of the year, which were just set last week. So overall, the underlying health of the market is indeed bullish and it's very constructive. So I have to fully defer to that, even as my overall short term trading call in the market remains neutral, just because I just can't shake this nagging feeling about these growing risk factors that the market is completely happy to ignore. All right, so let's dive into the indices, starting with the S&P 500. Let's change you can see this melt up. I'm going to just zoom in here. I mean, pretty much what was this? Every day this week, the S&P 500 was up until today, essentially flat. So, a day of rest, it makes sense. So, a day of rest for the market is flat. And otherwise, it was a melt up kind of week. I mean, there's not much else to say about it. We had an all-time high yesterday, and we're probably going to have a lot more all-time highs if assuming that this kind of melt up continues. Same thing with the NASDAQ. In fact, the NASDAQ looks even stronger. It did have an update every single day of the week, including today, a 0.4% increase. My favorite IWM, the ETF of small caps, the iShares Russell 2000 ETF, did not have a melt up kind of week. In fact, it had a much choppier week. It almost, because of today's 1% pullback, it almost ended the week flat. This was kind of a disappointment because with this positive reaction to the inflation report, IWM jumped 1.9%, which was a new high going back to early December. I just assumed that the market would continue the momentum today, and I was going to cash out as a profit for my call options that expired today. Instead, they were cut in half or more, I think. And so I just rolled the residual money into the next week's call options. And just as a reminder for anyone who's new, I have a very large core position in IWM shares, and I like to trade call options around that. And also, as a reminder, I'm presenting all this information for educational purposes. Please, when you trade or invest, keep in mind your own risk tolerance and trading horizons and objectives. If you have any questions or comments, you can put them down below in the captions. I appreciate likes and shares because that lets the algorithm knows what's up. And of course, you could subscribe to the channel if you want timely notifications of this content. All right, let's dive into the individual stocks that caught my interest and that were of big interest to the market. I have to start, of course, with Oracle. This was the big news of the week. I encourage you all, if you are into tech stocks, if you are into AI, please read some articles on Oracle. I will just summarize to say that the amount of bullishness in Oracle's earnings report was I don't want to say it's unprecedented, but it just takes me back to the dot-com bubble days of 1999 and 2000. Just incredible projections, incredible guidance. There's no way Oracle's going to top that, most likely. I actually am surprised Oracle wasn't higher going into earnings because if you all remember, look at this Stargate that was announced early this year. Oracle didn't benefit much except for like 2 days of trading. And then DeepSeek took it down, and Oracle was never the same until finally last earnings report, it popped up to these new all-time highs. So people haven't really been paying attention to Stargate and its implications. And so I took my eye off the ball as well, I hate to admit. So I had no position in Oracle even after it finally got to a new all-time high and broke out here back in June. Anyway, all that to say is that that's the context for the big earnings guidance that Oracle delivered. They have a huge commitment from OpenAI. The big catch is that Oracle is spending a lot of money. OpenAI, sorry, needs a lot of funding to be able to buy all of the products and services that they are promising to buy from Oracle. So there's kind of a chain effect here, and it won't take much to completely undermine this story. But for now, we'll assume that all is good. Oracle soared 36% on the day of earnings. That was Wednesday. Sorry, the day after earnings. That was Wednesday. Totally unnaturally large move for such a big stock. I assume the options makers, or sorry, the market makers lost a lot of money on options. And so I'm not surprised to see the sharp pullback as market makers now try to make back some of the money they lost on options, on selling options, particularly call options on Oracle. I mean, massive amounts of losses, I'm sure. So you can see the sharp pullback now in Oracle. Oracle pulled back 6% on Thursday and it pulled back another 5% today. And again, this is natural because anyone who was fortunate enough to be in Oracle is looking at massive gains and has to look forward into the future and thinking, okay, how much better can the news get from here? I can't answer that question, but clearly investors and traders are saying, I don't think, or we don't think the news can get much better from here, at least in the short term. What I'm going to be looking for is a classic pattern that Swing Trade Bot taught me, which is called the calm after the storm. Please do a hashtag on that term if you want to learn more. I hope to post about it. If it does happen, I'll post a short video just to describe the mechanics of it. So for anyway, I talked more about Oracle than I wanted to, but I think this is a big, big story of the week, and it's going to be an ongoing big story. Larry Ellison, CEO, founder of, I think he's still CEO, maybe he's chairman of the board, but definitely the founder of Oracle, is now the richest man on the planet. He overtook Elon Musk. Speaking of Elon Musk, Tesla. This is a classic technical breakout. I was watching this, and I did not catch this in time. I was trying to make a position on Thursday. I was being a little too cute with trying to get my limit price, and so I missed most of this 0.4% run up today. Nice breakout. You can see the pressure building in Tesla slowly but surely. The 20-day moving average, the dotted line is uptrending. You can see the stock being able to bounce off the 50-day moving average, which is the red line, bounce off the 200-day moving average earlier this month. And so that you could, all of this was saying, hey, buying pressure is building up, building up, building up. And I don't even think there's any specific Tesla related news that I saw that was significant yesterday or today. I just think this is a purely technical move. Um, there's a lot more, again, I could say about this, but I'll just stop to say that the position that I did take on today, I hate chasing stocks, but the position I took on is sort of a conservative move, which profits if the stock just hangs around the current level. That's the most I'll say about that, and we'll just see. We'll just see what happens. Now, Oracle's breakout rippled out into the AI ecosystem. One of the beneficiaries, one of the many beneficiaries, is Micron Technology, ticker symbol MU. It jumped, let's see, 3.5%. In sympathy with Oracle, you could see it was already um, motoring higher going into Oracle's earnings, and it's continued to motor higher. This is now what I call a parabolic move. Um, and again, you'll just have to look that term up if you want more deep technical details. But I consider parabolic because the upper Bollinger Band, this black line which defines the one standard deviation around the 20-day moving average, so that's like the expected price range, is defines the edge of what we should expect. And Micron keeps closing above that. And when a stock closes above the upper Bollinger Band so much like that, it definitely says the buying power is strong. But the minute this thing ends, the stock could pull back very sharply. So that's the caution that I take with these things and why I don't like chasing these kinds of moves up, even though it verifies that there's a lot of bullish conviction behind the name. I'm all about buying Micron on the dips because I think Micron is going to be one of those suppliers that's going to benefit for quite some time as other folks are spending goo goo gobs of money on AI. Okay, so now another big tech company stock that caught my eye but did not benefit from all the AI hype is Netflix. Now, just based on correlation, I have no idea whether this is actually true, but it's just my speculation, is that Netflix sagged because there's only so much money that's available in the market at any given time. And with all of this money moving into Oracle, moving into other AI related names, it makes sense that a favorite like Netflix is flagging as people lock in gains and send that money over to places that they think offer more upside. And so Netflix sagged to end the week. It's in a 50-day moving average breakdown. Technically, it's bearish, but I wouldn't short it here unless Netflix drops below 1146, which is the low from August. Now, of course, if I were to short Netflix, I don't have much room between that spot and the 200-day moving average, which is where I think Netflix will hold if it does fall back that far. And so I would probably just pass on trying to short Netflix and instead look for the next entry to buy it. All right, Glowworm, what I like to affectionately call ticker symbol GLW, which is Corning Incorporated, has had an amazing run. I was too cute. I sold a call option against my position. I was very fortunate to have ridden this uptrend for a while when I think I bought in when there was news dropped that Corning had signed a major AI supplying deal. I forgot what data center or set of data centers it was, and the stock has just kept going since then and accelerated after the last earnings. It's now doing this what we call an upper Bollinger Band walk. It's not quite parabolic, but it's consistently tapping the upper Bollinger Band, and it's been going on for what is this now? 3 weeks, 3.5 weeks. That's a pretty amazing record. And look down here, the buying pressure, the buying volume has actually been trending up as well. So this is just an amazing endorsement of Corning. I forgot to mention there are even two Bollinger Band squeezes that were resolved to the upside for Corning. You just can't get more bullish than this. So I'm really wishing I didn't have a call option sold against my position, but I'm not going to regret it. And I certainly don't mind taking the profits once my shares presumably get called away next week, and I'll just strategize on what my next move will be based upon what the technicals and price action is doing. All right, so next up, I talked about speculation earlier. I've talked about BitMine Immersion Technologies, ticker symbol BMNR before. I started to accumulate a position. I wrote about it on my blog, but now I'm finally doing pretty well. The stock had a nice breakout, 15.3% today. And I think things are bottoming out in crypto. So now people are being more encouraged to buy these kinds of treasury companies. And plus, of course, Tom Lee has his name on it, which is, I think, what helped provide a floor for the stock. You could see how not quite neatly, but it did stop selling off on the last pullback right at the top of the day when um, BitMine soared almost 700% on hearing that Tom Lee was on the board. So assuming no negative headlines or headwinds appear, I think the runway is clear for BMNR to just keep rising. I'm going to hold on here as long as I can. IONQ, my favorite quantum computing stock, soared. What was this? 18% to a new all-time high. You could see the pressure was building. I was really remiss in missing out on this opportunity to buy more shares, buy back into shares on this test of the 200-day moving average. And then I just took my eye off the ball. I mean, this just happens sometimes. I took my eye off the ball and I never got even a small amount of shares. What I like to do sometimes, if I think I'm chasing a little bit, is to buy a small number of shares. I didn't get any, and now I'm missing out on the latest breakout. I think the news today is that IONQ is going to be showing up with the president. I think they're visiting some country in Europe to talk quantum computing. I actually, honestly, I can't quite remember because I was just scanning the headlines very quickly. But anyway, you can see the strong endorsement of the shares, big time trading volume today. So, I'm still in buy the dip mode on IonQ. So I just have to wait until the next dip before I will get in. A stock that I did get into, which is Bill Holdings, looks like it's in the middle of one of these bearish to bullish turnarounds. And do a YouTube short on what these are. And you can see here that it did pull back a little bit the last 2 days, so it's not as strong as I would like. This is natural because it's approaching the 200-day moving average as resistance. And so Bill Holdings, ticker symbol BILL, naturally slowing down, but you can see the uptrend is still well intact. So I'm holding on to this. There is now I like the post earnings reaction. I think an activist has gotten involved here. So I think there's some good tailwinds to just ride out this bearish to bullish reversal for Bill Holdings. And this is one where I did stay on the ball. I've been watching this stock ever since it collapsed. Actually, since its collapse in 2023, I just never saw a good point to really buy up. And then I thought I missed everything when it soared back in November. So hopefully one of these days I will be in the stock when it does another one of these huge moves up. We'll just have to see if that happens. Okay. Another area that I've been keeping an eye on are the lithium companies, Albemarle. I thought I jumped in at a good time. It broke out above the 200-day moving average here, but then quickly fell back to the 50-day moving average as support. I bought more shares. I was hoping that this latest breakout above the 200-day moving average would finally break the downtrend, but unfortunately, Albemarle dropped again on high volume below its converged support at 50-day moving average and the 200-day moving average. So overall, this bigger downtrend is still intact since the all-time high way back in 2022. So that's the big caution here. I'm trying to stay in this because I think it's finally making a turn, but broken out just yet. So this is Albemarle Corporation, ticker symbol ALB. All right, next up, Boeing. Also looks surprisingly weak. It's broken down below its 50-day moving average, and it has confirmed that weakness. So technically, Boeing is a short. I don't want to short it, but I do have this on my radar as a potential indicator for industrial stocks. I actually am not even interested in buying Boeing if it does test the 200-day moving average support. I just like to check in on the stock because it's a bellwether for industrial type names. All right. And Boeing company's ticker symbol is BA. Enovis Corporation, which is a medical, I think it's a medical device company. Don't quote me on that. Ticker symbol ENOV. Caught my interest today because the CEO bought $200,000 worth of shares. Now, I like to chase insider buying, but I put this stock here as an example of where insider buying is not quite enough to get me to buy. And that's because when I scaled back on this thing, I saw that not only has it been in a downtrend since a peak in 2021, and this downtrend accelerated this year, but also if I go to the weekly chart, Enovis is actually even uglier than that because it topped out as an all-time high way back in 2014, was in a huge trading range. In fact, technically, I guess it's still stuck, but at the lower end of a 10-year trading range. So kudos to the CEO for stepping in. I bet you if I check the record, the CEO and other executives have been buying shares for quite some time to no avail. So I just can't get interested in this one until some other positive catalyst shows up and or it breaks this amazingly long downtrend or even better breaks out above the trading range. But I don't see either of those happening anytime soon. So I just put this a pass and I'll just keep an eye on it and see what happens over time. All right, we're almost towards the end. Wingstop, ticker symbol WING. This is one where sometimes I've gotten it right and sometimes I've gotten it wrong. I was trying to keep Wingstop, ticker symbol WING, on my radar because it just looked weak, having failed here at 50-day moving average resistance. And sure enough, the last 2 weeks, it's plunged almost straight down. It's broken down the 200-day moving average, but I completely missed shorting the stock or buying puts. And it's just the way it is. Now it's kind of overextended, but the reverse of the upper Bollinger Band walk, this is doing a lower Bollinger Band walk, which is very bearish. It keeps closing below. But again, the moment that this downtrend, this heavy selling ends, Wingstop could soar very sharply. So that's why I don't want to chase anything that's going way up because it could drop very quickly at any moment. Same thing with a lower Bollinger Band walk. Whenever it stops, the stock could just pop, zoom up like trying to keep a buoy underwater, just soar back up and really destroy a short position. Okay, but when this ends, I'm going to be very interested to see if the rebound can take the stock back to 200-day moving average resistance and set up either a new short or break out above that to set up a next set of longs. And finally, we have Abercrombie and Fitch Company, ticker symbol ANF. I noticed, I can't remember how I noticed this stock, but I saw yesterday, I was watching football. There was some funny Abercrombie and Fitch commercials. So that's why when I saw the name somewhere on a list of headlines, I saw it really connected in my brain. So I took a look at the chart, and lo and behold, Abercrombie and Fitch is actually having a bearish breakdown. It fell 7% today on decent sized volume. It's essentially bearish because it's closed now at a 2-month low. Um, I don't think I want to short it here. I'm pretty sure Abercrombie and Fitch, don't quote me on this, is a heavily shorted stock. But if it turns around from here, I think it'll be ready to soar, particularly on a breakout above the 200-day moving average, which is this blue line that has capped the stock ever since the breakdown earlier this year in January. All right, so that's all the stocks for now. Again, thank you for hanging in there. Hopefully, you will subscribe to my channel, put some questions, comments in the captions, or share this content with others. Thank you for checking this out. This is Dr. Duru from Ahan Analytics with the Market Breadth, and I will check you out the next time. Don't forget about my blog at drduru.com/122, all lowercase letters. Take care.